A massive green day within the crypto market. Big pumps across the board. I see only BSV over here is currently down. As for everything else in the top 100, everything seems to be pumping. Did the CPI inflation data get leaked? Does somebody know something that most of us don't, and they're front running the market? Well, let's find out exactly what the charts have to say. From my side, it's all a game of liquidity, which I did give you the levels, and that liquidity has been grabbed. Make sure that you do stay till the end so I can update you on those different liquidity zones and what is coming up next. So focus on the high time frame, a bit of macro, and then we'll go into the low time frame data. So of course, the very important day today is the core CPI data that is coming out. It's a month on month. You have the year on year as well on top of that. So a lot happening, and this is typical. This is what you expect in this type of a market. You expect that there is going to be volatility, which is brought back into the market, and pretty much now is when you probably want to start to de-risk. For those of you who have been watching over the December holidays as well, I did outline the potential for tagging these upper zones, and I'll give you the next ranges and levels to watch out for in just a moment's time. But let's start off over here with TED Talks Macro, and this tweet, he says, today's US CPI report is expected to show month-on-month disinflation for the first time since June 2020. However, core inflation is expected to tick higher, which could place pressure on risk assets. Hence, I just said that one of the reasons we're coming into resistance now, probably want to start de-risking. And he goes over what the top banks have to say. I won't focus on that, but touching on this disinflation, this is something to be expected. As mentioned, when the Fed continue to raise the interest rates to bring down the inflation, they're not going to stop at their target of 2%. You can expect it almost becomes disinflation. They're going to go down below that level so that 2% does become the mean. So let's go fast forward all the way to the end to his summary, his TLDR. Most banks expect headline inflation to decline noticeably due to lower energy prices. So coming down because the energy prices are included in those measures, but view core as the risk to an upside surprise. Core inflation is likely the more important point as it strips out volatile components like energy prices, and the data is coming out at 1:30 UTC, which is a little bit later on. So Gavin says over here, how has the market reacted on every single CPI day over the past year? This is with relation to the S&P 500, and here you have it. So it's been green, and then from February all the way to July we had red, where the market tanked and sold off. August was green, September red, and then October, November, December has been green. So it is expected that the inflation is going to come in better than expected, and therefore, or lower at least. So therefore, a rally could come into play in the short term. And Macro Alf, he says, the cyclical growth rebound coming from the Chinese reopening is being priced in, meaning that the market would rally because the Chinese has reopened. And he says, fair, it does make sense. But a sudden reopening of the second largest economy in the world with pent-up stimulus to be spent can also be a temporary boost to inflation. Markets are ignoring this angle. So something to consider. You might see inflation coming down now, but because of what China's doing and reopening, and they have a certain level of stimulus that's going on their side, that may lead to the next couple of months increasing back up with inflation, and therefore the Fed have to get tighter again, which means if they do go down to their 25 basis points today, or at least in the next meeting, that doesn't necessarily mean that they're not going to go back up to 50 or 75 in the future. So you do want to be cognizant of something like that. And just Kale, who hates crypto, very strange names. You have unique names in this crypto Twitter sphere over here. He says that if you think tomorrow's CPI print is bullish, wait until March. The worst month in inflation history is falling off the back end. Inflation is about to absolutely nuke, I'm telling you. And then he says, for those not good at math, The average month-on-month print the past 6 months has been like 0.2 and trending down. This time last year it was 0.8. Last March it was 1.3. So yeah, new numbers are less than old numbers. Hence CPI is down. And here he has a graph over here showing March of 2022. Look at how it spiked up at 1.3. So 0.6, 1.3, and then it came down. Every March seems to be a big CPI spike. So a couple of things that coincide with how that would play out with China. If they do end up spiking the inflation back up, that is something you want to be cognizant of, that it's not over yet is essentially what I'm saying. It kind of works like a chart, right? Lower lows, and then sometimes you have these relief rallies that create another higher high, and then the trend continues back down to the downside. So Ash WSB over here says CPI data releasing, of course, today. Year-on-year is expected at 6.6%. So basically, if it is going to be 6.6% because it's lower than the previous inflation print that we had, that would still be bullish. If it's even below 6.6%, so anything under that, that would be very bullish, and markets would rally hard off of that. And then, of course, if it goes up above 6.8%, then yeah, we're effed. It's that's not what we want to see. That would be definitely a massive inflation shock and surprise to the market. So price-wise, what's going on? Well, you can see that on the weekly chart, we've tagged the middle Bollinger Band over there. So it directly wicked into that, and we've consequently started to pull back ever so slightly. Not much has happened on the volatility front, which you can see on the lower band over here. This lower line chart is continuing to trend towards the downside. It is starting to flatten out ever so slightly. And if that starts to pick up, that means volatility is coming in. But at the end of the day, you still do have this major resistance zone over here, which I have outlined. This area is going to be a very difficult area to get through. But if the inflation comes in way under 6.6%, I would anticipate that would be enough to rally the market right through this level. But until you clear this previous lower high, and you're an investor, you're probably safer to sit this one out. I understand that a lot of people feel a heavy sense of FOMO. I'm thankful that I've been completely cured of that. I don't get it anymore. But when I first started trading, it was something that really, really affected me. If that affects you, the only advice that I have for you is to take 1/10 of whatever you were hoping to throw into the market because you have FOMO, and only use that 1/10 and then just wait a couple of days and see what happens from there. Most of the time, people that buy into FOMO get absolutely wrecked. So keep that in mind over there. However, there is still potential for a little bit more upside. I could see price action pushing deep into this gray box area over here, right into that resistance zone. That would trap a lot of longs, and then likely it comes back down. But I'm going to give you both the bearish case as well as the bullish case, which is a Wyckoff accumulation that could potentially be playing out. I outlined that on a previous show on the 27th of December, and we'll touch on that shortly. Okay. This chart over here, also weekly chart. You remember we're waiting for weekly confirmation to see that this does cross through its trend line. This is the weekly RSI over here. We want to see a break of this trend line. Once that happens, that is fantastic. Then we start to look for a potential for a new range, accumulation phase, and then potentially start to make higher highs and higher lows and establish a new bull run. So I would be very, very happy to see that, but I will not act soon on this. I will not front run this idea. Every single time, you guys know who have followed me for a long time, pretty much since up here was when I started doing shows. I told you every single time, I will not front run the idea. I will not front run the idea. And I've been very, very thankful for that ever since, because of course, price has continued to trend down. And we are in a strong downtrend. You cannot deny that. Look at the angle of this. Look at the angle of this downtrend over here. Relief rallies do happen in a bear market. Of course, it's part of the game. But you should treat this as a gift if you are a bear. If you are somebody that is looking to short, you have a relief rally in a downtrend coming directly into resistance. And what do the smart people do? The smart people buy support and they sell resistance. They buy on the red days into support and they sell on the green days into resistance, especially if you are in a downtrend coming into all these important moving averages over here. So the thing is, you need a trigger plan. That's the most important thing. You don't want to blindly short or you're going to get absolutely wrecked. I know already yesterday people were starting to short when we were around 17.5. And I said I wouldn't yet. And I'm saying the same thing today. I think it's still a bit too soon. Okay, Lucid SAW, definitely on my radar, keeping a very, very keen eye on this. It's coming in at exactly $18,856. If that breaks, my whole bias begins to switch. This is a very, very important indicator that I've used over the past 5 years of trading crypto. Got into crypto 6 years ago, but only really started to look at charts 5 years ago. And this has been a very, very reliable indicator for me. So keeping a close eye on that. Now, Simon over here says that prices across the markets are quiet as we hear FOMC speakers talk of higher for longer rate policy and wait for markets' reactions to CPI. Equities are embracing risk tentatively. The US dollar is getting sold while bonds are stuck. I have to think that CPI is going to come in cool tomorrow, as in today. So that is a real possibility. That could definitely happen. You can see that the market is front running the Fed, and I would suggest not to bet against the Fed if you're an investor. If you're a trader, you can play this game. Definitely, we're going to get onto the low time frames now, which is why I outlined the long opportunity from $16,000. And Markets and Mayhem says over here, who is right, the bond market or the Fed? And we'll go on to those charts over here. I did mention to you guys months ago that what you typically want to watch is the yield curves. If you do start to see the yields top out and it's starting to look like that could be a possibility, but you really need to break down this major support area, which has held for many, many years. That's coming in between that 3.4 and 3.57% level. So far, it's looking like that is now another lower high, but I would wait for the lower low, a break below that moving average. That is on the 30-year. Then you could start to see risk really rally. And the same thing is true over here. If you look at the 10-year coming straight into that box, let's see if that's going to have a reaction and bounce off of that zone. 2-year is doing exactly the same thing. Then you have the DXY. Now, my personal belief is that the DXY could squeeze into this major support zone, meaning that it could come all the way down to 101. I do think there's a possibility that the DXY has topped for at least a number of months over here within that region, but that doesn't negate the possibility for one more rally. So what this means is, since there's some level of inversion to the DXY, the dollar index, and the crypto and equities market, that would mean that if the dollar continues to squeeze down into this major support box over here, then you could start to have a look at where Bitcoin, crypto, and equities are topping out. Look for them to potentially top out. Once this starts to bounce over here, that would lead to the next leg down. So that means that if you are long, pretty much here is where you are within the greater scheme of things. You got a couple of days potentially left before there will actually be a pullback. So ES, this is the S&P 500 futures I did mention yesterday. Pretty much look at the orange lines, the horizontals. This is kind of the main range that I'm looking at. You can see that we've respected this downtrend very, very well throughout the whole year, throughout the whole of last year at least. And we're currently coming directly into that zone again. You have price, which has hit straight into that 200-day moving average, and it seems to be rejecting off of that right now. So I wouldn't blindly short over here, because where would your invalidation be? It has to be up here above that wick. It's too high. I would wait to see if there is going to be any stray wicks, because you never know. You might see something exactly like this again coming into the CPI, or at least into the inflation today. So if you see something like that, that would be your opportunity to enter into a short once the candle is printed. Once you see a candle print like that, you know that's game. It's a candle that's showing you that it's time to go short. So that's what I'm looking at there. Now, this system over here with the short, medium, and long-term moving average price has recaptured it, but the probability of it being a fake out like it was over here is very high, even higher than what it was over here, because now you have the whole horizontal resistance which is coming into play. Therefore, I would want to wait a couple of days or candles at least to see how this pans out. If you can convincingly start to close above these levels, then it's a real opportunity. There definitely is a real opportunity for investors, at least for the longer term players, to start to build their long positions, and maybe things are really beginning to shift within the market, and potentially a bottom could be in. Too soon to call. I'm definitely not saying that a bottom is in by any means. Okay, here's the show that I did. I know there's some people that think there it is. So I gave live on air. I told you I'm not taking the long trade. I said I'm on vacation. I'm even wearing the same shirt that I was that day. So before you guys start to give me the shirt comments over here, I said I'm on vacation. I can't manage a trade. As soon as you enter a trade, you enter into a loss because of fees. That means you have to baby that trade. You have to manage that trade at every single moment. I wasn't willing to take this trade. There was the trade opportunity. If it does play out according to the Wyckoff accumulation, you're potentially looking at your first target at 21,796, your next target at 25,000. And if things get really, really heated, you're looking to potentially go up as high as 29 to 32,000. Which is over here. Here is the chart. So I showed you, I said this is my best case scenario of how I want. So there it is, yeah, Machu Picchu, you're from Peru. You're saying I missed the whole bump. I gave it live on the stream. I just wasn't able to take it because I'm on holiday and, we need to rest sometimes. So this is basically what I'm looking at. This would be my ideal scenario. So let me zoom in on this. If you do look at this, it's playing out exactly as I had initially showed. I would actually like to see a spike into that $19,000 region. That would get the pattern traders very, very excited because you have a falling wedge pattern, and everybody would be going absolutely mad, thinking that, of course, we're gonna rally out of this entire zone over here and then start to tag those higher targets. So I would actually like to see this react as a little bit of a fake out and then come down for one more final leg, and that would have confluence with those much, much lower levels, strong horizontal level, as well as the middle of this channel. So you can see the channel over here. Here's the middle of the channel as well. It all lines up. That's the zone that I'm watching, and here I would go long, despite us not, at this point, we still wouldn't be in an uptrend, by the way. So if price were to do this, if price followed this path, went up and came all the way down, you're still maintaining a very, very strong downtrend, as you can see over there. But because it's such a historically strong horizontal level, I will definitely be buying there, which it goes a little bit against my rules of I only usually buy in uptrends, but I would make an exception, and I've outlined that entire plan on my Twitter. Go to my Twitter. There's the link above, or there's a link in the description. Type that in. It's a very, very top tweet. It's been pinned onto my Twitter. I explained exactly how I would plan on entering the market at key horizontal levels, combined with dollar cost averaging, and then entering the final 50% in an uptrend. It explains everything. That tweet thread is going to be relevant for this whole year. So anytime that you start to experience extreme FOMO, that is your cure. That is your cure to FOMO. Go and read that tweet thread. So we're looking at this. That was the potential Wyckoff accumulation. Here you go. I had let's just grab it. There we go. There is the Wyckoff accumulation potentially going into phase E, which is where you start to see things really rally. And there is a tweet here from Gert van Lagen. And he says here, the upper line of the Wyckoff resistance range is being tested once again at 17,550. And he says, is phase E coming next? So if you do look at the Wyckoff accumulation phase, again, if you want that, the video is on the 27th. It's the one I just showed you. Just fast forward to that part. It's still relevant. You're pretty much holding a slight uptrend over here on the lower time frame. And then you're looking to break into phase E, which is where things really start to get moving. And then you're looking at about in the 20s for a potential rally. Inverted chart is telling us, danger, you're coming into resistance. You already hit 17,833. The trend line is coming in at 18,532. What happens if price breaks through that trend line? So if you start to see this and price comes through, and breaks that trend line, that does not mean that you're just rocketing straight to the moon. That simply means that momentum is slowing down. This is a momentum trend line. You break that, and now you start to look for the market to range, which is why I also said to you, do not have FOMO. That's a good thing. If you break that trend line and you start to establish a new range, you can establish a new accumulation zone. Okay, the daily chart over here with the Fisher distance from EMA, here we are, we're getting to those levels. I know most of you probably watch every day, so you know exactly what I'm talking about. That 4.28 level is where you typically want to start to position yourself to look for, close your longs or to actually flip short. If you're trading the market, this is where you expect the majority of the tops to take place. And I'll wait. I'll be patient. You have to wait. Look at it happened over here on the 14th of December. This is kind of what you're looking for. You're looking for a candle that prints like that. Once that prints, you know you can immediately flip short, and then you have a free ride with a lot of momentum to the downside. And I think this time there would be even more momentum because more people have gone long and been trapped into longs. Okay, 4 hour over here, coming directly into this trend line. Not a major trend line, just something that I'm watching. Find it interesting that it literally wicked to the pretty much the tick into that trend line. And now we're pulling back. Still possible that we can break that. So we're moving on to the low time frames here. This was from yesterday's show. So I'll move on past that. The super guppy indicator, if we can hold above here for some time, we have the opportunity to turn this green. It hasn't been green for a very, very, very long time over here. Here we have a trap scenario. So it turned gray, almost turned green, and then proceeded to break down because of a bear flag scenario, which has happened every single other time. So this bear flag holds more resistance than the other bear flags because you have now stronger underside resistance as well as important moving averages, which are, in this case is the 200-day moving average. It's pretty much governed the entire trend. There you go. It's governed the entire trend to the downside. This would be our first test of it. Typically, you don't break it on the first test. Where is it coming in on the first test? If it hits pretty much over the next couple of days, $19,464 and declining with each passing day. So I hope that brings you some, some comfort for those of you who have missed out. And I hope for those of you who participated in the long trade from 16K, that also shows you that maybe now is not the time to be extremely greedy going into this. Okay. Longs to shorts, you have pretty much a 3-to-1 ratio according to GMX, which is decentralized, so it should be pretty accurate. Obviously not a massive sample size like Binance, but at least we can trust this data. You have 92 million that are running longs. You have 31 million that are running shorts. So I would wait for it to get a little bit further out, maybe like if you get to like a 1 to 4, and all your signals are showing major resistance topping out, then that is a strong opportunity to start to enter into your short positions. Okay, not much on this chart. Everything's about the same. The spot buyers continue to jump into the market. Liquidity is being tapped. You have the futures contracts also still pushing the long side. So in line with what I just showed you on GMX, the open interest is still relatively low. So it's not as heated as what it could get, meaning that there could still be further upside. I showed this on yesterday's show as well as multiple shows beforehand. Daily supply has been tapped. Now it's a matter of patience. Probably not going to trade today. I'll just wait to see what happens with the numbers because it's very wiki. It's all over the place. You know, people are trading off of news, and it creates a heavily volatile environment. I'm not really too interested in trading this. Final target was met. That was the final target, is the daily supply. That's been hit. Trade over if you were in the long. As I told you, I narrowly missed the long that I tried to take, so I didn't participate in this. Okay, the liquidity zones. Liquidation levels was coming in at 17,500. The other liquidation level is coming in at 16,600. So this is according to here you go, the high block capital. They work out with heat maps the different liquidation levels. Shout out to Crypto Nova. I got the chart from his account over there. I don't have a subscription with him, so thanks for the free info. And I told you one of these are going to be hit. So if we fast forward to this one, There we go. It's been hit. Liquidation level got hit. This is the way that institutional traders work. They just look at where the liquidity lies. They have big orders that need to be filled, and therefore price will always gravitate towards the liquidity, which means that you should be positioning yourself to look for downside moves, because the next liquidity lies at 16.6 and a little bit of is just above 16.8, so $16,900. That is on Bitcoin. Okay, let's go on here. 1 hour chart on Bitcoin. I don't have too much to say on this. I'm just going to wait to see. We had our main range. I told you that we're working level to level. Because this happened so quick, price, of course, pulled back into that. There is a possibility that it's just going to load up and go again. There is also the possibility that this is going to deviate and come back into the range. I am not too worried, to be honest with you. I'm not going to do anything. I would just wait to see what happens with the CPI data. It's just not worth trading. But otherwise, you'd be looking at, let's just go on the 4 hour chart. Okay, there it is. Your next level is going to be around that $19,000. So if you start to play it level to level, that is going to be the next level. Let's grab that. So if it can hold above the range high is 18,150. If you can see price holding above that zone, then pretty much you're playing level to level. You're going to about 19,000. And that is the last zone where you meet the most resistance. Now, I want to touch on Ethereum very, very briefly. Okay, this is what I put in the daily candle newsletter yesterday. So for those of you who are not yet subscribed to that, it is entirely free. Sign up to that. This is what I'm looking at. Pretty much you have two things going on here, similar to Bitcoin. You have a parallel channel to the downside, and then you also have your range. So range low, and you have your range high. Now, what I like about this zone is you're meeting the top side of the channel, which coincides with the mid-range. So I mentioned yesterday's daily candle. You can subscribe. The link should be below if you're wondering. I was looking for potential deviation and weakness. So you need to wait for the trigger, as mentioned. What would the trigger look like? Because I don't know how high this is going to squeeze up. This thing could squeeze all the way up to 1700, and then you're going to get absolutely wrecked if you started shorting from here. Wait for it to start to turn back down, depending on how high it gets. I would obviously, if it starts to turn down from up here, I would then look for my entry somewhere around this zone. If not, my expectation would be exactly what these little squiggly lines show. Basically, Ethereum to push up maybe just around this 1470, 1500 region, turn back down. So it's an over-under situation. Once it gets back into the mid-range and back into the channel, then this zone over here would have been a major fake out to the upside, and then I'd be looking to short back down. Now, what about the other end of the stick over here? Well, if it starts to hold above, so if you see price holding above like this, and it just won't get back below the mid-range, then you actually want to go long. Then you can long it to the range high. Range high on my chart, I have set at, here you go, 16,000. Excuse me, not 16,000. You'd all be celebrating and rich then. It's $1,695. That's my range high for Ethereum. It's pretty much coming in from, there you go, May and... is that the May lows? Yeah, May lows, the wicks from May low all the way across to the November 2022 high. That is my range high that I'm looking at. So guys, I hope that helps. I have refunded both my Bitget as well as my BYBIT account because I am now prepping for the next trade. I think we've got to that time. There is going to be opportunities which are coming up. Still trying to get back into the market after this week. I'm starting to feel like I've got my bicycle wheels back, and I'm ready to ride this race again and take some trades. So if you don't already have an account, feel free to support me. You lose nothing, and it does help me. You actually don't lose anything. You gain something. You can get up to 30,000 sign-up bonus on BYBIT, and as well as on Bitget, they also have sign-up bonuses. Just click the link in the description below, and make sure to get your account ready, because that's where I'll be taking the majority of the trades. So that brings us to the end. Thank you all for watching. I appreciate each and every one of you. I hope that you have an absolutely stellar day, and let's see what the market gives us going into tomorrow. We'll have a lot more guidance going into the next couple of weeks, but my anticipation in summary is I think that we'll be range bound right until we have the next FOMC meeting, which comes up in Feb. So give this video a like, hit the bell notification, and subscribe to the channel, and I shall see you all on tomorrow's video. Cheers for now.